Good morning, traders. Welcome to the TMT Stock Market Strategy video for Wednesday, December 16th. Well, it's all about the Fed. We'll see what happens here. We did get a little bit of a rally yesterday going into the Fed announcement and, of course, in the overnight session as well. So we will see if these little gains that we're having right now are sustainable. Gold is up a little bit. And quite frankly, guys, it doesn't matter. It's all about what the Fed, what the Fed does and how the markets react to the Fed, bottom line. They could raise, they can't raise. And if the market likes it or does not like it, that's the only thing that counts. And I think that's going to dictate the next several weeks. And, of course, the next couple of weeks going into the new year of 2016. Now, I do believe, and again, my opinion, that if they raise rates, I think the market will get a knee-jerk reaction. And then, of course, the markets will rally thereafter because the uncertainty's out of the way. We're getting into an interest rate rising environment. And then that's going to obviously affect banks, bonds, crude oil, gold, and the dollar. And that's something that I'm going to be watching closely because I do believe we're going to have a really good gold trade and a very nice oil trade at one point in time. And I'll get into that in a moment. If they do not raise, I believe that, in my opinion, that the markets will sell off pretty hard. So it's really about the Fed today. It has nothing to do with anybody else, the talking heads on CNBC, or myself for that matter, of what anybody thinks. You have to trade your own trading plan, and it's best to let the markets do its thing and let it decide for you where that trend is going to be, if it's going to be up or down. Why would you want to be holding positions going into that Fed? Because it's a very well-anticipated meeting, guys, today, so it's very important. All right, enough said. We're going to run through these charts, guys. Nothing really happened, although I do want to show you the UUP, which is the dollar ETF. I put this beautiful bullish fallen wedge, and we broke out of that wedge yesterday. Now, again, a day doesn't make a trend, but if history repeats itself, you could say that this is a pretty nice big bull flag here on a daily chart. And again, if the Fed does what it has to do, and the dollar traders like it, I think you're going to see a big rip, and you're going to see a major push lower on the commodities, on all commodities across the board, grains. Gold, oil, precious metals, you name it, it will go lower, and the dollar will go higher. Now, at one point in time, I do think it's going to be either the dollar going lower and gold rising, or both, the dollar rising and gold rising because of a fear trade if we get a major sell-off, okay? Now, obviously, that has not happened. The relation isn't that, so I just wanted to give you a what-if, just to keep an eye on things, all right? Let's take a look at the GLD. And you could see here, we talked about this yesterday. We said, watch this area here. We do have a beautiful bullish fallen wedge, which we broke. And now we kind of back tested and we filled that little bit of a gap here. Okay, so that's why I said, guys, don't get too crazy. Yeah, our beautiful, our MACD and our RSI is trending higher. So we do have some nice positive divergence from where we are now, kind of in line with what the charts are telling us. Okay, but you could see here, right? We have a little bit of movement, and that's pretty much it. I mean, you know, it's just not. To me, it's not enticing. I'm not really excited about this little pop. And on the daily chart of the GC, we're still in a big rising, bullish falling wedge. Excuse me. So I do think that we break 1,000 in the gold contract, and I do think that we break 100 here lower, and that's when we're going to start looking to buy gold. Okay, that's right now. That's the plan. Okay, now let's take a look at USO, and I think that that we can probably buy this in anywhere below $11. You could start looking at it. I do like the fact that we have nice rising volume as the market is coming in. That means we have some good distribution, but I want to see a base here. I want to see this build here, and then we have a nice little base, and then break out of that base, and that's where I'm going to be looking to get long with the next higher low from this previous low. Again, when that does happen, okay? But I am looking at gold and crude oil for a trade. You know, we want to be opportunistic here. This is important. All right, spiders. So we talked about either this bull flag, right, to get this out of the way. We got a bull flag, or we have this M formation. You can see that right here nicely. So we are at that neckline area. We'll see. Nothing has happened yet. So I do think the Fed is going to need to break out to take this market higher or lower. We have the 50, we have the 20 below it, and we have the 200. So we have some confluence area of resistance. You could see that right here. All right, there's the 50, there's the 200, and there's the 20. So we have a lot of resistance up above, and we're going to need the Fed, some sort of a catalyst to push this market higher or lower, and that's going to create that Santa Claus rally. And remember, guys, we're coming into that time now. This is the time where the market's going to need to shine. All right, are we going to get the Santa Claus rally or not? Well, it's going to need to happen today, tomorrow. Otherwise, we're just going to chop around here and do pretty much nothing for the next 2 weeks. Okay, I don't think that's going to happen. I do like the volatility that's in the marketplace, and it's going to give us some great opportunity. All right, M pattern formation, higher, lower high from this previous low. Here's the neckline. We've held the neckline. We're above the 50 and the 200. Although this is acting better, this is a lagging index, and I'm not so crazy about laggers leading the other indexes. Okay, why? Because the IYT, which is the Dow Jones Transportation Sector, this is the main leader, right? This is the leader, guys. And we're not doing nothing but leading lower. So eventually this market divergence between the Russell and the transports will catch up. It doesn't have to happen this year. It doesn't have to happen the first 2 weeks of January. But rest assured, once everybody is playing around with their positions and jockeying their portfolios, you're going to see fund managers say, well, you know what, guys, enough's enough. Let's start liquidating and getting positioned properly in this market. Because remember, they're all behind the curve. Everyone is underperforming the market. So they're not going to look to rattle anything going into the next couple of weeks unless their hand is forced. But after the new year, when there's a full clean slate, they don't want to be behind the curve, and they're gonna definitely start moving things around. And that's where I think you're going to get the really big movement. Okay, Russell, IWM ETF, M formation. Although this is a little higher, I still call it it's an M-top formation. And you can see here, broke out of this large symmetrical triangle as well. We broke the neckline. Now we're back testing it. Nothing more, okay? But also keep an eye on the Russell, because the Russell comes into a seasonal time of strength this year between now and the end of the year. So if the Russell gains a lot of strength and we start really pushing hard in the Russell, guys, we could really make some good money in this Russell. So watch the IWM, okay? Lastly is the Qs. A lot of these large cap stocks, these large high beta names, the Amazons, the Googles, the Facebooks, the Apples, they did well. They recovered a little bit from the last couple of days. Let's see what happens today. Remember, 2 o'clock, Fed. Be careful, guys. Keep the book light today until after Fed announcement. Have a great day.